Hello, everybody, and welcome to a special edition of Bleeding Crypto's Bitcoin Update. This is going to be the beginning of a new series that I would like to start, and I would like to do these about 3 times a week or so. The object of this is to increase my YouTube followers. So if you could please subscribe to my channel and hit the like button if you find this information useful, I would greatly appreciate it. I'm trying to just get that following much higher than what it is. I haven't been focusing too much on YouTube, to be honest with you, but I think I would like to, just to be able to inform my followers what's going on. It's a lot easier doing a video and explaining your thoughts than trying to write it in a post on Twitter. Sometimes your thoughts or what you write gets lost in translation, and I think this way would be a good source to be able to convey what I'm thinking visually as well, and kind of get used to my style of trading. Everyone has different styles of trading, and I don't find one person's method superior over the others. I think the ability to find the set of tools that you need to interpret the price action, and most importantly, that it works out to your advantage, then you have yourself a good system, regardless of what those tools are. As long as they work, I think that's what everyone strives for, to be honest. Just something that's going to make you money and that's going to play out more often than not. And if you can find a system that accomplishes that, then I think you've got a winning system. My system is pretty simple, guys. I don't convolute it with a lot of different technicals. I use very basic way of looking at the market. I use EMAs, MACD, OBV, RSI, and obviously, your classic support and resistance. And that's basically what most indicators are designed for, to identify those areas of support and resistance. Oh, and by the way, one major one I guess I should point out is Fibonacci. I'm really big on Fibonacci, so I do like utilizing the Fibonacci into my areas for reloading, for possible continuation bounces, for lower high areas once we've had a drop. So let's move on. Let's start our market update. And like I said, if you guys can please subscribe and like the video, I would greatly appreciate it. So I'm going to continue to utilize this particular. Well, I'll see. I used a blank chart actually right now with no notes. This is my original one. This is the one I use on a daily basis for my Discord. But this one here, I just opened up fresh this morning actually, as I was doing my morning brief for my Discord. Every morning I do a market update for my private Discord, and this was a pattern that I was talking about this morning, and so far so good. We bounced very nicely on this trend line. So we've got 3 confirmations. At the time that I did the video, I only had these 2 points of this extended line. So earlier today, we got the bounce here, which is yet another set of confirmations. I like using the confirmation of 3 to establish an area, a trend line, whether it be diagonal, horizontal, whatever it may be. I do like the power of 3. And luckily, I got the power of 3 here on this bounce. So what am I expecting for Bitcoin? Let's do this. Let's start out with a macro view so that you can understand what I'm looking for in the market. And many people obviously always asking me, is my 886 invalidated? And my answer to that is not yet. It could be, it may be at one point, but not as of now. So let me run by that real quickly. Let me just jump into the weekly time frame, and we're going to strictly look at price action. So looking at price action, to make it very quick without going into too much detail, we had a very clear area. We had a very clear downtrend, better said. And the latest downtrend gave us some pretty clear and cut dry technicals, which is we have a lower high, lower low, lower high, lower low, lower high, lower low. Some people don't count this as a lower high. I'm going to count this as a lower high because as you can see here, we kind of came down into this area. I guess, you know what? You could and you couldn't, but for the sake of the video, I'm going to count these as 3 lower highs. Again, just for that power of 3. What I wanted to see to confirm that we are no longer going to be looking at, or I will no longer be looking at 886, is a reversal of trend. Have we accomplished that? Did we break these 3 lower highs to confirm that reversal of trend? And in my opinion, we didn't. We got very close to it. So we broke this lower high clearly. We broke this lower high clearly, but we double top off of this lower high. Does that mean that it's invalidated, that we're not reversing a trend? Not really. What I would have liked to have seen is us break above it, then come down and form a higher low, and then move up and form a higher high. That would have completely reversed the trend on the break of this. Actually, on the break of the bounce, not the break, excuse me, on the bounce of the higher low, that would have then confirmed that we reversed the trend. What did we do? We actually put in it, we put in this high here, this local high, then we put in a higher low. Now, we put in a higher high technically, but it is not a really convincing higher high. A higher high would have been something with a little bit more follow through. At least break this prior lower high that we established back here in September. Instead, we topped off below that. We put in a higher low, but unfortunately, we double top there. So does this mean that we're going to be going down or that we're no longer going to be going up? I'm still leaning bullish, to be honest with you, even with this double top here of this September high. And even though we have 2 weekly double tops right here, I'm still leaning bullish. And let me give you the reasoning behind that. I'm going to put on my indicators, which are going to help me explain why I'm still looking at I'm still leaning bullish for a continuation. So let's wait for that. Oh, here we go. I got to take this off of here. There we go. And let's do this here. I'm going to just take this. I'm going to exit out of this for now. Okay, so why am I still leaning bullish even though we haven't broken the trend and we haven't put in a reversal of trend in this area here? Again, we did put in just to confirm, we did put in a higher low, a higher high, but it's not a very convincing higher high because it doesn't give us a lot of room here for another higher low. So typically what we want to see a higher high with a higher low. Yes, we want the higher low to be greater than here, but typically we don't want it to break below the previous higher high. So, and here we already did that with this wick here, not by much, but it doesn't give us a lot of room here for that really convincing continuation of trend. So, putting that aside, look at the 200 EMA. The 200 EMA on the Binance chart was a very tough area to break through, as you can see here from that September high, that August-September area. This is actually October 8th, October 15th, that we broke down and we started to create these these lower highs. We were able to now break above the 200 EMA, which is to me significant. Let me turn on the 200 MA because that's going to also play in. A lot of people follow the 200 MA, rightly so. And we are actually at the mercy right now of that 200 MA. The 200 EMA was hurdle number 1. And I think hurdle number 2, a very important hurdle, is going to be that 200 MA here on the Binance chart. And I'm using the Binance chart because it's a chart with the most volume. And I'm not going to get into the fact that all of this volume was fake volume. All this was, as we know, was printed internally by Binance. It's already been proven. It was proven before the government started to come after them last week. We were talking about it for weeks before that. A lot of data showing the proof of that. So whether you want to believe it or not, that's not what this show is about. But this was created with fake fake money, better said. This wasn't retail coming in. This wasn't a bull season. This wasn't institutions coming in. This was one exchange printing with their own money and buying up the market to chase after basically the derivatives market, which is what's the market that's moving us right now is derivatives driven. That's for another show. You guys can do your own research on that. There's plenty of research on Twitter for that. This is more talking about price action and what I'm looking for a continuation to the upside. And if so, where are some of my targets to the upside and what would invalidate my 0.886 thesis of $11,377. So to continue, why I'm leaning bullish, we got above the 200 EMA. So that's good. Another thing is that we had a cross between the 9 and the 30 EMA. If you can see my labels here, you can see the labels, the 9 EMA being this here, this teal color, is above the 30 EMA. That's really important. We haven't had this crossover for a very long time. Look up here, guys. We lost that. We actually had a death cross of the 9 and 30. I'll call a bearish cross, a death cross, whatever you want to call it. It was a bearish cross here back in January, over a year ago. That is a very big deal if you're an EMA trader and you follow his EMAs. This took a lot of a big move to be able to get to where we're at now. Yes, we're barely crossed it by, $130, but it's still nevertheless technically a cross, a bullish cross. So we've got that working for it. We've got the 200 EMA working for it. What do we have against us? Against us, we have the fact that, look, the 200 MA is still providing resistance. The 50 EMA is still providing resistance. Now, for a continuation, once we break up here, if and when we break up here, what am I looking for? There's a few targets that I have in mind. One of them is going to be, again, because I'm an EMA trader, I'm looking at the 100 EMA. The 100 EMA is an EMA that back in this area here last year, we found a lot of support on the 200 EMA. Now, if you follow the EMAs, you will also notice, depending on how closely you follow EMAs, and this is actually true not just for EMAs, but any type of horizontal or diagonal resistance or support, that price action likes to backtest those areas once it's lost it, whether it's support or resistance. And when we lost the support of the 100 EMA, we never came back to backtest it. We dropped with all the Celsius, 3AC, all those liquidations. Then we had the FTX collapse. So we had a lot of sell pressure. That sell pressure allowed us to allow the 100 EMA to come closer and closer to the price action. So as we're getting closer to the price action with the 300 EMA, I think this is a very reasonable target. Not only is that a reasonable target for a backtest of that 100 EMA, but if we go back to the 4-hour time frame and we look at that diagonal support, that ascending triangle. So let me just show you we'll take it off of here. We'll take it off of here. I'm not going to worry about these little deviations here. This has a nice little touch, a little more, gives it a little bit more touches. So, you know what? Let me make this white just to match so this ascending triangle here, the break of that, if we measure that, let's go ahead and let's take a measure of that. Let's clone it. Oh, excuse me. If we break out, say we break out right there. Again, we're plotting our thesis to the upside, and we're also going to plot our thesis to the downside, and we're going to take it level by level. So if that is going to be our target, okay, now let's go back to the weekly time frame. Do we find confluence with that area there? Do we find confluence with a breakout of that triangle? I believe so. Look how close we're within. I don't know, not that, maybe a couple of percent away, a margin from hitting that 100. Let me see here, a couple percent, yeah, 2.5% margin from hitting that through 100 EMA on the breakout and completion of that ascending triangle. That's pretty close. And again, we haven't broken out from that yet. So as we continue to stay in this area here, this is going to allow every day that passes by is going to allow this to drop further and further down. We may, by the time we break out, we may have already reached the 100 EMA has already reached this area here of that measured breakout from the ascending triangle. So we don't know yet, but 2%, guys, I think we can with reason we can say a 2% margin is pretty good. We can also use that same logic to the downside. Look at this area here. I actually like this area a little bit more, to be honest with you, as an area of resistance off of that break of the ascending triangle. Why? Because areas of support and resistance tend to really strengthen that area of support and resistance. And we have another area here strengthening this line. So let's make this line yellow for now. Let's make this yellow as a secondary target. So if we're going to give a 2.5% margin to the upside, let's be fair and give a margin to the downside as well. And this secondary margin is 1.76. So this is, I think, is a very reasonable margin to the downside and to the upside for that breakout of that triangle, the ascending triangle, if indeed we're going to see that breakout. And again, going back to this yellow, if you look at the support resistance here, the support here, let me look back here. It lines up, doesn't line up very good with this area here, but you get the gist of it. So so that is an argument for the upside. Now, I like to find confluence. When I look at an area like whatever it may be, a ascending triangle, any type of pattern, any type of breakout, when I'm looking for a target, is there confluence? So we have confluence, one with the measured, one with the 100 EMA, that's confluence off the measured, that's one. Then if we look to the left, we've got some confluence here too. Now I want to look at confluence with another very important metric that I've been using a lot in the past several months, and that's going to be the metric that I find in HyBlock. The metrics that I find in HyBlock are very important to me because if you've been following the market closely and you're looking at the derivatives market against the spot market, you will know that the spot has not been driving this market. Derivatives has. So the derivatives liquidations have been playing a really big part in how we've been moving and why Binance has been printing this move to the upside and coming after all of these liquidations. And if you can see here, look at this delta here. You see this green area here? We've got a nice area of liquidations up here to $27,350. Let's go back to our chart. Let's look in here. I'm going to erase these little things just to so it's not so crowded. So $27,350. Look at that. That's right in here. Right in there. Right in there. Again, that's three areas, that's three confluences that we can find within that target of the ascending triangle breakout. So that to me is a pretty good area to look for taking some profit on these areas. Also keeping an eye on the alts, because if we get a rejection inside of this area, you know that the alts are gonna pull back in the beginning, and maybe they catch a little bit of a break from Bitcoin, and then they start running. We all know that there's a cycle that we go through. We have Bitcoin runs. Then after Bitcoin knocks the wind out of the rest of the market, then we see Ethereum and some of the majors run. And then after the Ethereum and the majors run, then we have the mid caps run. And then we have the really extreme low cap shitcoins that tend to run. And then we have our rotation back into Bitcoin. So watching Bitcoin for a signal on when to come out of an alt or when to take positions into an alt for that next cycle, I think is really important to be able to identify those areas on Bitcoin. So that is my thesis for the short term as far as a bearish move. Now, excuse me, as far as a bullish move. Now, let's look for a move locally to the downside. Then I'm going to give you a macro view to the bull side, and I'm going to give you a macro view to the downside, which includes 886. So, but let's take it locally first. We're going to take it level by level first. So that was my I'm going to erase this. So I'm going to go ahead and just, we don't need to see any of this. I made my case, but you know what? It'd be nice to follow through on this. If you guys want to take a screenshot of this, I'm trying to avoid having a lot of lines on the chart because that gets a little overwhelming for people who are not used to viewing charts. The more lines you have on there, honestly, it just becomes really confusing. So I'm actually gonna hide the indicators for now, and I do want to erase these lines. But if you want for your own notes, if you want to go ahead and snap those same lines, so you can go ahead and follow me. You can follow that on your own and see how well this breaks out. So let me go ahead and erase this. Remove these. Remove the drawings. Okay, now let's do a move to the downside. What am I expecting for a move to the downside if we fail to break out here? If we fail to bounce from a new higher low and we do double top off of here and we break down, what am I looking at? Okay, well now we have a pretty good double top. A double top that the right side extends to the upside like it does here is not something that is out of the ordinary. Why? Because a lot of this here are liquidity hunts. They're liquidity hunts off of this area here, but primarily they're liquidity hunts off of this area here, as these were areas of a lot of people who got trapped in here. They want to exit their trade, or they have their stops in those trades. So seeing a deviation off of a double top on the right side here before coming down is not out of the question. Is not something that is out of the ordinary. So this to me is still a double top. Yes, a perfectly market structure double top would have been, maybe this side a little bit lower, showing that downtrend. But again, like I said, this area here is not something that I would discount that as not being a double top. If we don't continue from here, if we stop here and we continue to break down, I am going to consider this a double top. Now, there's a couple of areas of support that I want to talk about. Let's talk about the first one. This to me, I think was the most obvious area of support would be this prior area of strong resistance. Look how well this area played as support, resistance, support in here, and we got close to it here but not quite. But this to me is a very valid area of support. Now that's 20,877. Also, I'm going to, because there is just so much right here, there is a lot to also consider as far as other metrics, and I'll talk about that in just a second. There is a CME gap that is at 20,300 that I'm also going to take into consideration. The only thing about a CME gap, guys, is you have to understand that, and this has happened quite a few times for those who follow the CME closely, we could actually close the CME gap and not reflect on the regular exchanges that are not driven by the CME. I've seen that plenty of time where a wick will come down on CME, close it, but it's not reflected on any other exchange. So that could definitely be a possibility. So rather than putting a line here for support, I feel more comfortable putting a box here for support. I'm actually going to change this yellow line into a green line because that represents support. And when I look for a box, I'm going to look for the same properties. I'm going to look for support, and I'm going to look for an area of resistance. And I think I can find that pretty well here, even if I just go here. But I kind of, right in that area there, I'm going to go, that gives us, actually, I'm going to use this one right here. I'm going to use that one here just for shits and giggles. I'm going to use this as an area of support. Now, the gap on the CME, let me just go to it really quick here. Let me look for that gap on the CME. I believe it's this one right here. So here's that gap. In that gap, to fill that gap, it's at 20,015. So it's a little bit lower than our chart. Let's go back to our chart. Oh, I did not do that. Oh yeah, no, I can go back in here and right there. Okay, perfect. We have right there. So 20,000 is that CME gap. So let's just go ahead and just mark it. Actually, look at this. I just noticed this right now. Look, if we snap a line where that CME gap is pretty much right on this support, resistance area there. So lots of, not a lot, but there's definitely confluence inside of this area with not only support and resistance, but a target of the CME gap. A little lower than that. If we lose this area here, look at this. This, I think, is one area that a lot of people are looking at as an area for extreme support. And this is an area where if we lose this area here, we're more than likely going to be revisiting these lows. And then it becomes a question of, do these lows hold or do we break down to new lows? And obviously, if we break down to new lows, that's where I would say my 886 is back on the table. But we're not going to cover that just yet. I just want to cover this local bearish move. Now that we've established areas that make sense for support to the downside, I have to use my Fibonacci. Fibonacci to me is, let me just use a regular extension right there. Okay, so we've got the Fibonacci sequence. Now on my Fibonacci, guys, I use 3 metrics that are not part of the official Fibonacci rules, which is going to be the 706, 886, and 0.50. Neither of these 3 are officially part of the Fibonacci sequence, but I use them because they play out more often than not in the markets. So I utilize whatever is going to work. Now, looking at the 2 levels that are not technically part of the Fibonacci, you can see why I used them. None of this was rehearsed. None of this was planned, but you can see the 0.50. It's as actually, if you look on Investopedia and you pull up the 0.50, this is also referred to as a stock market fib. And this is also part of, I believe, the Gans theory, the 50% rule. But on the Fibonacci, again, not part of the actual sequence, but look how well it would work out. And also the 50% Fibonacci and the 382 are 2 Fibonacci levels in my sequence that I like to look for continuation. So when we're having a move like this, I look for the 382 and 0.50 for continuation. And what do you know? Look at that. We hit 382 and we bounce. Yes, we double top. We haven't followed through, but this week's not over. We still have 5 days and an hour left for this candle to resolve. So this candle can still technically break out of this double top formation that it is now. And we would have had that perfect bounce off the 382. Once we drop below the 0.50, I no longer... it becomes less probable that a bounce is going to occur. When we break here, it becomes more probable that we're going to come down into this 618, 706, or 786 as a accumulation or consolidation, whatever you want to call it, consolidation zone. So that's why I look at these 2 levels. For me, are these 2 levels here and here are really important for continuation. Now, if we break through this area that we talked about, look at 706. Look how it lines up absolutely perfect with this area here. I mean, couldn't be more perfect than that. $29 off. That to me is good enough. It's close enough. Do you see why I love TA so much, guys? You see how we started really basic? We just started looking at some EMAs, some support and resistance. We took those off and we went to the basic support and resistance. We mapped out an area of support and resistance based on price action. And at the very end, we put in a Fibonacci, and what do you know? Everything lines up very nicely. I don't know if this excites you or not. It excites me because I love technical analysis. I do this 7 days a week. I look at this 7 days a week. You can't do this 7 days a week unless you absolutely love it. You have to love what you do in order to put this much time and effort into something. You have to love it. And I, as you can see, I absolutely love it. So this is my look for the downside. Right now, this level, this would be my last level for the downside that I would want to see before I start considering the loss of momentum here. Because if we come down and we break this lower low, this higher low, what do we do, guys? What did we fail to do? First of all, we failed to reverse the trend, obviously, number one. And we invalidated this reversal of trend market structure. So keep this in mind, guys. Even though we haven't broken the reversal of trend, we technically did put in a new trend to the upside. We just haven't reversed this. So when we look for a reversal of trend, we look for two things. We look at prior lower highs. So we want to break this, but we also do this by a new market structure, a new trend establishing higher highs and higher lows. What we did exactly that. Higher high, higher low, higher high. Wasn't the best looking higher high, but technically we did put in a new trend. We just haven't broken out of the previous trend. So nothing. The bulls are still in control, barely. Good confluence. So we've got some good points for the bulls. I think I said bulls. I think I said bears, but I meant bulls. You know what I meant. Okay, now let's start talking about the macro view. If this is a continuation and we do break these lower highs and we reverse the trend, does this mean that we are now into a new bull market? No, not necessarily. And I made a video about this a couple of weeks ago, and I'm going to touch on it very briefly for those who haven't seen it. And if you haven't seen it, I encourage you to go through my feed and look at that video. I think I put it on YouTube as well. It might be on my YouTube channel. So we can very well be in a situation where we're coming up here, guys, and we're going to do what we did in 2019. 2019, we went up to 618. We tagged the underside of 618 before we went down and we tested the lows of 2018. We could very well be in that scenario where we come up here to $48,000. We could come up to $48,000 and still be in a bear market. Let me show you. For those who don't believe that can happen, who don't believe that's possible, let me show you something real quick here. Let me show you. Look at that. Came underside 618 and we came back down into testing these lows. We were $650 away from this low here. Was this still in the bear market? Absolutely. When were we in a new bull market? Well, look at the price action. We actually had 3 confirmation off of this diagonal line. Look at this. 1, 2, 3 rejections. 4th rejection, broke above it, came back tested this. At this point here, this is technically when we said we are done with the downtrend. We have flipped it, confirmed it, and up she goes. At this point right here. Yes, this means here this was the bottom of the market, but we hadn't confirmed anything yet. We were still within this diagonal trend line. And this confirmation, this breakdown here, again, confirms this trend line was a valid line. A 4th time, a breakout and back test confirms, again, that this line was a valid line. So fast forward. Again, guys, you don't have to believe none of this, guys. You really don't. I'm giving you my opinion based on facts. And there are people that don't want to hear it. They don't. They're like, no, la. We're on a bull. That's fine. You can believe whatever you want. I'm going to give you my opinion, and I'm going to give you based on facts and based on what I'm looking at and how I view the market. And that's all I can do. to be honest with you, at the end of the day. It may work out, it may not work out, but that's why I have a thesis, level by level, a more of a macro view, and then I'm going to trade what I got in front of me, depending on the levels that get invalidated or validated, again, depending on how I view the market, in which time frame I'm viewing the market. So on this macro view, here would be the top of the move of this continuation move. So if we do get a stronger higher high off of this weekly candle that hasn't closed yet, and we put in a higher low and we're higher high, and we start and we invalidate these three higher lows, we have now reversed the trend. We hit here. What do you think I'm going to be doing, guys? I'm going to be looking to sell, sell, sell. And if I'm wrong, guess what happens? I rebuy it. It's no big deal. No big deal. I was wrong. We didn't do what we did in 2018. We flipped it. We back tested. We continue. I buy it higher. Do I lose a few percentage? Do I lose a few thousand? Yeah. So what? What's the big deal? Everybody thinks that you have to, if you're a trader, you have to catch the very bottom and you have to sell the very top. And if you're a day trader, you have to spot on hit every single one of these. That's not realistic. Well, put it this way. I'm not smart enough to do that, and I don't do that. So I'm going to look at an analysis like this, and if it confirms as it's going up, I'm going to say I'm going to stick to my analysis. Right here is where I sell, regardless of what the market looks like. Because imagine what the market is going to look like. Put yourself in a time capsule, if you will, just for a second. And we're moving up. We're putting higher highs, higher lows, and the Twitter is going insane. They're calling for 100,000. They're calling for 500,000. But you know what? We can hit here and do exactly what we did here and drop, because people are doing the same thing in this area here. And I would have sold, and I take my profit. Great. Now, let's look at the macro view to the downside. Macro view to the downside, if we don't hit that 618, because that can be a possibility, because we're right here. We're at the do or die. To me, this is the do or die level here. We have to resolve something inside of here. Once we drop, if we fail to maintain this upward trend, it becomes harder now for a continuation. It becomes harder to break this. Now it becomes a matter of this. If we don't break out of here, guys, we fail again to break above here. Now it becomes a question of, do we hold this? That's the question right here. That's it. Do we hold this? If it doesn't, this is the line in the sand right here. 15,491 is the absolute line in the sand, because we could still come all the way down here and still not hit 886. It'll just be a test of the lows. You break this, and I don't see anyone would take a bet of us not going down to 886. Or even lower. I don't know how much lower it can go, but my target is 886, and then if it goes below it, then I'll reassess, or if it doesn't quite reach it, I'll reassess at the time. But again, for me, those are my targets. You have to have targets based on the way you view the market, the way you analyze the market, and you got to stick to those targets. You got to stick to your rule set, and obviously you're going to tweak them from time to time depending on how things are looking and what other factors that play into the market, like the dollar, the broader markets, war. There's many factors that could completely invalidate your setups, and we would take those into consideration once they happen. But we're not going to sit there and try to guess what a black swan event can do, what it can bring to the market. It's just not something that's you're gonna want to introduce this early on into the game. Right now, we play what's in front of us. We look what's in front of us. We look for validations, invalidations within this area. We map out certain areas to the bottom. We map out certain targets to the top. If and when indeed one of these targets do hit, we then, guess what we do? We wipe this and we start over. That's a life of a trader. We reanalyze. We start from fresh drawing board. We we erase everything. Okay, now what? We've done this or we've done this. What's next? And you take it as the market gives you the data. Because every day the market's going to give you new data that's going to either confirm or invalidate your thesis from the day before or from the week before or from the month before, depending on the time frame you're looking at. All right, guys, I think that is a good view. You have a good view of mine for the macro and for the local. Moving forward, I'm not going to be covering the big macro views. I want to do these videos so that they are more towards the local moves that's going on right now. So we're going to stick within a tight range, within a 0.50 to maybe a 1.445 extension to the upside. That's going to be our window. We want to stay within this window, and we can even go a little bit zoomed into like a 4-hour time frame, and then look at those smaller time frames, maybe patterns that may be forming that will be trickling over to the higher patterns, to the 12 hours and daily patterns. I'll be reviewing my EMAs and how I look at my EMAs and what they tell me as far as strength and weakness in the market. And I'll give you a quick example. My go-to EMA is the 12-hour EMA. So when I look at the 12-hour EMA, this is what I look for. When I look at the 12-hour EMA, I look at the 9 EMA on the 12-hour time frame. If the price action is above the 9 EMA on the 12-hour, I'm still bullish. When we break below it, not looking too good. Market is locally bearish. We need to climb up. We need to climb up above it. Once we climb up above it, I'm a lot more optimistic that we're going to get some more of the downside. When I have a bear cross between the 9 and the 30 and the 12-hour, that's usually followed by is followed, but not followed, because this is not a leading indicator, but it usually is going to indicate a pretty good drop, as you can see in this area here. Vice versa, when we do have a golden cross, a bullish cross, however you want to call it, and you have the 9 crossing bullish from the underside of the 30, then you can see that impact that it has on the price action. Everyone has their own go-to time frame that they like to look at. Mine has always been the 12-hour time frame. So I'll be touching a lot on these videos on different multiple time frames. But again, my point is that I'm going to be keeping these local. I don't want to be rehashing the tops or the bottoms on the weekly time frames or the monthly time frames. Just no need for it. It doesn't, unless you're a swing trader, you're a long-term investor, you can see it once and literally revisit it in 6 months. It's not going to change. It shouldn't change too much, or every 3 months. You don't have to look at it on a weekly basis. There's just no point in it. So I'm going to end the video here, guys. I hope you enjoyed it. Please hit the subscribe button. Please retweet this, share this with your friends and family. Give me a thumbs up if you like it. If you like the content, I'm really trying to increase the subscriptions. If time goes by and no one is really paying attention to these, I don't get a lot of views, I don't get a lot of thumbs up or new subscribers, I'm just going to phase out. It's going to tell me that the market is not interested, and there's no point in doing them. I'm just going to stick to my Telegram and to my private Discord group. In the description below the video, guys, I have some referral links for some exchanges that I partnered up with. I have BingX, I've got Bybit, I've got Prime XBT, I've got HyBlock. If you want a referral link for HyBlock, I've got that as well. So if you're going to be signing up for any of those exchanges or for like HyBlock, use my link. It gives you a discount. It gives me a discount on my subscription as well. We both benefit. We both benefit. So if you can do that, great. If you don't, you don't. No big deal. It is what it is. But hopefully you'll return the favor. The karma will come back to you, and the karma will come back to me. All right, guys. Have a really good day. I will update this. Give me a few days. There's no need to do them every day. Today is Tuesday. Let's shoot for Thursday. Let's shoot for Friday for the next video, and then we'll go from there, and we'll do this, like I said, every 2 to 3 days, unless there's something that is like a really big event or a big drop. Like, let's just say 10% drop or more, yeah, I'll update, because that's a significant drop in Bitcoin. So something of that nature, then I would make a video right away. But if it's just a regular chop zone breakout type thing, we'll have some topics to talk about on the next show. Everyone have a really good day, and thank you so much for tuning in.